Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We had the Federal Reserve release the minutes from the January meeting. Headlines are all pointing to them looking to stop the unwind of the balance sheet before the end of the year. Yeah, that's ultimately what the patience is exuding, but we're not really seeing it totally like that. But on top of that, they did point to the low liquidity in December and the time of year that it all happened in that selling to exacerbate the moves. So there's a way you could look to construe this a bit to be less dovish than ultimately initially thought. But really what your takeaway here is that they are patient. And really what we're also looking at too is in the markets, the dollar index is finishing off the lows and moved higher in the release of the minutes, and the treasuries are moving a little bit lower on that initial release and consolidating. So the markets are always right, and really there's just not a whole lot of new, fresh news here, though we were hoping to see something. But what we're taking on, looking forward here is the euro at 113.73 is the level that it's finishing right near there. It's major three-star resistance. Tomorrow is going to be flash PMIs, regionals, and the Eurozone read. This is going to be crucial, especially on the heels of all the recessionary fears in the Eurozone. So look for this, and then we got initial jobless claims, durable goods, Philly Fed, all coming out of the U.S. So the data tomorrow is going to move things. The euro and the dollar index are key. Watch where things start to move, and we got to see that close in the euro out above 113.73, start to carry it a little bit more, maybe up to the 50-day moving average. On the downside, 113.30. Got to continue to hold that area to be constructive in the very constructive in the immediate term. Then moving on to the yen, it's holding ground. Can't get above resistance, but that support level below, major three-star support, aligns with the continuous 200-day moving average. That's holding the yen in place despite this strength in the equity markets. Remember, the yen's a safe haven, and we've got this risk appetite in the manner that it is. It's really taking the air out of the balloon for the yen. So continue to watch that. No fresh, real major data to watch, but again, tomorrow recessionary fears would really start to potentially spike the yen a bit, but it's going to be about that equity market. If the equities pull back, you'll get a reinvigorated tape for the yen. And then lastly, talking about the Aussie, you got employment data, manufacturing PMI, services PMI tonight out of the Aussie. It's been very constructive, but you have minor resistance overhead. If you get solid data, this could easily move another 0.5 to 1% higher very quickly. So keep an eye on the Aussie off the technicals. And then with the Canadian, we have the ADP payroll report tomorrow. Not a very big number for Canada, but you have wholesale sales as well. And then all the U.S. data and the overall risk sentiment for both the Aussie and the Canadian. It's the fact that these trade talks between the U.S. and China are continuing has kept a bid in both of them in a very constructive manner over the past couple of weeks. So keep an eye on this. We're here to help. Give us a call, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of research. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thanks.